The new week begins with crypto markets suspended in calm. Bitcoin trades just above $112,000, Ethereum near $4,000, and volatility hovers close to its yearly lows. Momentum indicators have flattened, but participation remains steady, a quiet equilibrium between patience and potential. Underneath the surface, liquidity continues to build. Spot order books have thickened around the 110,000 zone, and leveraged positioning is the cleanest it has been in months. That stability forms the foundation for the next impulse, though timing remains uncertain. Market energy now lies not in movement, but in compression. Technical structure supports a balanced outlook. Bitcoin's near-term floor holds between 105 and 110,000, while resistance persists around 115,000. Repeated respect for both zones confirms traders' willingness to defend their levels rather than challenge them. Ethereum reflects the same discipline, supported by staking demand, capped near 4,500. ETF and institutional flows remain the quiet drivers of tone. Creations again outpaced redemptions through Friday, though total volumes declined with volatility. Analysts describe this as a structural drift, steady capital rotation, no panic, no euphoria. The longer this persists, the more energy accumulates for the eventual breakout. Macro conditions entering the week appear neutral to slightly constructive. Commodity prices eased, yields stabilized, and the dollar softened modestly. That environment keeps risk assets supported without triggering a speculative surge. Traders now focus on next week's data releases and central bank remarks for fresh catalysts. Derivatives markets point to calm conviction. Funding rates remain near zero, implied volatility continues to decline, and open interest is rebuilding slowly. In similar historical setups, expansion has typically followed periods when both realized and implied volatility flatten simultaneously, but direction depends on liquidity flow, not sentiment polls. The likely frameworks for the coming sessions. Scenario 1, range persists. Bitcoin continues oscillating between 110 and 115,000 while Ethereum drifts near 4,000. Scenario 2, gradual upside expansion. ETF inflows accelerate and spot demand lifts Bitcoin toward 120,000. Scenario 3, liquidity shock. A sudden macro headline or over-hedged options expiry sends price briefly under 105,000 before recovery. All three remain valid. Probability still favors patience. Speculative Corner, for the degens among us. Meme and gaming tokens once again saw bursts of weekend volatility, with several names posting double-digit swings in thin liquidity. Funding spiked briefly before returning to neutral, highlighting how capital migrates toward noise when majors stand still. It's entertainment, not trend, but it reveals how attention behaves when markets rest. The message for the week ahead is restraint with readiness. When markets fall silent, participants start listening more closely. Price will eventually speak again, through volume, volatility, or both. Until then, discipline remains the edge. For more insights on Bitcoin, Ethereum, and the forces moving the crypto markets, remember to like, subscribe, and keep learning, here at Crypto in Black and White.